So index has done exceptionally well for some years now. The longer it goes on, the more likely index eventually will have issues, and you'll see a period in which active returns do better. If there's any sort of correction or volatility, it's active funds that tend to do better in that period. And having done so well for so long, it's more likely, given the history tends to rhyme or repeat or whatever you want to view it as, that after a period of index funds doing well, it's time for active to do a bit better, and we suspect one of those periods is coming up. The big thing in the next year or two will be stock picking. Indices may not do well, but if you can do stock picking well, you can add value over the top of share market indices. Competition's good, but it will mean a few business models do get seriously disrupted to the point where they go out of business. That's inevitable. And you've got to be very careful. Again, if you think about it, it's why you probably wouldn't want to buy just the index, because it'll capture all those companies that fail as well as the ones that succeed. If you can do a good job as an investor, you can anticipate which companies are going to come under the most pressure and avoid them, and you can anticipate which companies will benefit and invest more in them, and thereby get a better return over time. The first thing we've done is we've screened out the high debt companies, the companies that aren't managed well, that don't have good models. So that gets rid of, in Australia, about a third of the universe. And we focus instead our research effort on trying to pick the stocks out of that remaining quality set that are undervalued, and that almost pre-builds the portfolios to do well during a downturn. And at the same time, in periods like this, we have higher than usual levels of cash. So our cash levels are quite high. We've already got high quality stocks we think are quite cheap. So the overall portfolio navigates these down markets relatively well and allows us to keep some powder dry to buy as markets are bottoming and starting to head back up again. And we've seen quite a few cycles like this. It feels a bit like history repeating to us, but we've been there before, and we want to make sure the client experiences low volatility is a more comfortable ride for them and helps them get through to the other side.